Hello, everyone. It's Wednesday, and it's time for my Wednesday story. Is anybody able to get by with just minimal sleep in here? I am one of those people that has to have my full 8 hours. I used to be back in college. I used to be able to pull off the kind of intervals, like I would do like 2 days at 4 hours of sleep, and then I'd catch up on the next day, like 12 hours on the next day. And I kind of grew out of that as I got older. I mean, too many busy seasons in accounting and just wasn't able to. So I'm pretty solid 8 hours sleep a night, or I just don't function. Anyway, I was going to bed right before I went to bed last night. I found a mosquito in my house, and I'm like, "What is mosquito doing in my house? It's not. It's the end of summer." And that got in my head. It got in my head, and I kept thinking there's mosquitoes all over my house, and I kept imagining them biting me while I was asleep, and I'd be like almost drifting asleep, and I'd be like, "Was that a mosquito?" And so I did not fall asleep till like well after 3 a.m. and I had to wake up at 7 this morning, and so I'm a little bit woozy. I'm a little bit weird today. I'm functioning okay, but if during the discussion I tend to fade off or say something bizarre, please keep in mind that I'm not a young person, but I'm operating on young person levels of sleep. So that's my excuse, and I'm sticking with it. Today we are going to do NetSuite, and we're going to do homework. We're going to flip it from our normal routine. We're going to start with homework today, mostly because the NetSuite assignment is do it on your own, and I want to give you the remainder of class to work on that, but I'll debrief you on that after we get through the homework. So let's start out the homework and blaze through this so we can get started on the NetSuite assignment. All right, question number one, which of the following is not an activity within the sales and collection process? So what do we do in the sales and collection process? Remember, we take a request from the customer, like usually we start out with a quote, and then the customer sends us a request, the sales order. We fulfill that sales order by sending the goods out to the customer, send them an invoice saying, here's what you owe us, and then they pay it eventually. So selling products and services, yeah. Billing customers, yeah. Managing accounts receivable, yeah. Recording payments from customers, yeah. All of those are steps in the revenue process or the sales and collection process. So we can say E is our answer. All of the options are sales and collection activities. By the way, this leaves in an interesting point. You will notice in the book that there's a lot of options for all of the above or none of the above. I will occasionally put a question on an exam. And by the way, on the exams, there's 4 possible answers on the exams. You can actually check the practice exam. I've got that posted online. But there's 4 possible answers for every question. I will occasionally put all of the above. Anybody want to guess how frequently all of the above is the correct answer on one of my exams? Approximately 1 out of 4 times. Yes, it will occasionally be correct, but it will not always be correct. Whenever you see all of the above, you should not just default. All of the above has to be the correct answer because Dr. Barnes used it. Sometimes it's just because I couldn't come up with a 4th answer. So that's a simple truth. And so keep in mind, you will need to know this content. You can't just default to all of the above if you see all of the above. Question number 2. Sales collection process is the point of contact between the firm and which set of external business partners. So the easier way to think about this question is, what is the name of the groups that we conduct sales with? Those are customers. That's all there is to it. That seems like such a give me a throwaway question, but it's a really important distinction to make, especially when we get to purchasing and we talk about vendors. We do need to be able to distinguish customers from vendors. Which of the following sales and collection process activities can result in the creation of an accounts receivable? This is a really important question. It should be a really easy question, but I've had students who've missed this question in the past. So this is a really important question, and one that will definitely be on the exam in some shape or form. We will need to know, when do we recognize the sale? When do we recognize the actual sale to the customer? So receiving a sales order from a customer, we've not done anything yet. We haven't met the purchase obligation, so we can't actually do that. Shipping ordered products to the customers, that's when we've actually met our purchase before, or sorry, shouldn't say purchase obligation, performance obligation. Has anybody taken 302 with Dr. Eisen? Has it talked about performance obligations in that class? Yeah, that's basically the recognition event, the performance obligation. Issue a quote with the customer, that's well too early, and recording payment for the customer, that's way too late. So shipping orders to the customer, shipping our products to customers, that's going to be when we recognize it. Now, again, the recognition point depends on whether it's going to be freight on board shipping point or freight on board destination, but all other things being equal, this is the best answer. Moving on to question number 8. Which of the following is an example of a business rule implementing access controls? So we're talking about a business rule, something that will create an access control. And remember, access controls is differentiated from application controls, and then access control has control over who gets access to the system. Application control is basically tracking the activity throughout the system. Now, I want to talk about A and D because those look like they could possibly be business rules. There shall be a physical account of inventory each quarter, and this or internal auditor shall be used. Something that's distinct about the controls controls are basically precautions over transactions and events. That's a general statement when we talk about controls. These are more policies in the organization. They're not considered controls. When we talk about controls, we're talking about, all right, for every transaction, an invoice shall be issued. That would be an example of a control. These are more organizational policies that are in place, which is a little bit confusing because of the way they're worded. So A and D are not the correct answers. We got B or C then. Let's look at C. Computer system shall generate an audit trail. Is that a business rule? Yes. Does it implement a control? Yes. What type of control? An application control, okay? We're looking specifically for an access control, which would be B. User recording collections cannot modify sales records. Remember, when we talk about business rules, we had the obligatory, prohibited, and allowed, okay? This is going to be a prohibited. It cannot modify sales records, so B is our answer. All right, everybody enjoy the next few questions about the multiplicities. I know you didn't, but it's important to note, okay? Multiplicity is not much fun to talk about, but we do need to talk about them. So here's our diagram, and I'm just going to read off the question so we can keep the diagram up here. So number 11 says, refer to the associations marked with the number 1 preceding the diagram. So we're looking at number 1, okay? And which of the following is the best description for each for the association? So this one specifically starts with employee. So if we're starting with employee, we're talking about this multiplicity over here. So employees can be involved in zero sales or many sales. Does that make sense? Could you have employees in an organization who are not involved in the sales process whatsoever? Yeah, probably many employees are like that. They may be involved in other process areas, could be in the purchasing process, which they want to leave outside of it. They could be administrative. So it's possible you have employees who have no sales engagement whatsoever, or you have employees that are involved in many sales. If they are employees that are in the sales process, they probably conduct many sales transactions. So 0 to many. Which one of these answers is most consistent with that? B, each employee participates in a minimum of 0 sales. All right, moving on to question number 14. Refer to the association mark with the number 2 in the preceding diagram, which the following is best description of the association. So it says each cash receipt to start, okay? So we're at number 2, all right, number 2, looking at this one right here. We're looking at each cash receipt, we're moving up to 1. So each cash receipt involves 1 and only 1 employee, okay? There's not really much room for interpretation in that in multiplicity. It's a 1-to-1, so it's only 1 employee can be involved in a cash receipt. So C, each cash receipt is associated with 1 employee. By the way, if you see a question like this on the exam, if I'm asking multiplicity questions, what you should do to start, interpret the multiplicity before you even look at the answers. That way you don't have any confusion, and then you look for the best answer to meet what it is that you interpret. Now, if you look at it and say, well, none of the answers match my interpretation, it's possible your interpretation is incorrect, okay? But it's a good habit to get into to see, I know what to expect to look for before I even look what the answers are. That's part of the reason I do these activities so consistently. Question number 17, refer to the association marked with the number 3 in the preceding diagram. What is the best interpretation of the minimum multiplicities of the customers next to the customers of 0 instead of 1? Now, this is an interesting one. So it's asking specifically about this one right here. So customers are involved in a minimum of 0 sales and a maximum of many sales. So why is that 0 instead of 1? I'm going to say that this one is a little bit of a tricky question because all of these are possible interpretations of that. I should say A through D are all possible interpretations, but it's asking for the best interpretation, which something in accounting, as you will find, sometimes it's looking for what is the most correct answer instead of what is the correct answer. Now, I will largely abscond from trying to answer or ask questions like this in the exam. I will try to give you a clear-cut answer, but I do think questions like this have value. So let's look at the answer. Some customers don't pay. All right, so that's a possible answer, but if that was going to be the case, then we probably would not include it as a sales transaction either. They would just reverse the sales transaction and cancel it if the customer doesn't pay. Some customers place orders but don't pick up their items. Same rules place is that they place an order but they don't pick it up. We would cancel the sales transaction because it was never taken care of. Some sales are made in cash and customer information not recorded. That's an interesting one, okay? Because that implies that there is a sales transaction, but there's no customer information, which would be a 0 customers for a sales transaction. So that would possibly be our answer, but let's look at D. Some customers never buy anything. Again, there's not going to be a sales transaction if that's the case. So we probably would not have a sales transaction. So the best answer, the one that actually results in 0 customers for a sales transaction, is going to be C. All right. It's all about the interpretation. If you got it wrong, don't feel bad. This one was one of the more challenging questions, but I do think it was a relevant question to ask. Question 21. Refer to the association marked with the number 5 in the preceding diagram. All right, right over here. Which of the following is the best example of a business rule that constrains the association? All right, so we're talking about sales, so we're going to be talking about this multiplicity here, because remember we talked about the farm multiplicity. So sales have to involve at least one inventory item and a maximum of many inventory items. That's how we interpret the multiplicity. Let's look at the business rules and see which are consistent with that. Sales are allowed if they include at many inventory items. Boy, that's just confusing right there. That's bad editing. It's not a. Sales are prohibited if they include more than one inventory item. All right. That seems silly, by the way. You go to the Hy-Vee grocery store, says, I'm going to buy cheeseburger and buns. I'm sorry, sir, you can only buy one of those. It's like, yeah, it's really, really rough. Yep. Sales must include at least one inventory item. That's a sensible and intuitive policy because we don't want to have sales transactions that don't involve inventory items. Now, if we have a service, that might include a sale with no inventory items, but we're talking about a pure merchandising or manufacturing scenario, then it had to be at least one inventory item. So C is our answer. But let's look at D. Sales are allowed with manager's approval in advance. I'm not sure how you would interpret that based on the information in the chart. Okay, that's just not something that's given, so we can ignore that. Question number 25. Refer to the number, so association mark with the number 7 in the preceding diagram. This one was, I like these next couple of questions because this one's a series of questions where you really have to think. So assume that customers pay for all sales in full at the end of the month. Which of the following is a multiplicity that should be found next to the cash receipts class? Okay, so we're talking about sales and cash receipts. Okay, so sales can involve at minimum how many cash receipts? All right, at minimum how many cash receipts? Well, sales could involve 0 cash receipts because we could have customers that could not pay what they owe. Okay, so sales can involve a minimum of 0, and then it tells us that if a customer is going to pay, they have to pay in full. They have to pay in full. So a single sales transaction is going to be paid in full at the end of the month. So that means that it's going to be involved with exactly 1 cash receipt. There's no partial cash receipts on a sales transaction. So our multiplicities are 0 and 1. 0 and 1. Now, if you answered 1 to 1 on that one, which is D, that would probably be a reasonable interpretation of that because you would assume that everything has to be paid. The only caveat I'd say to that is if somebody made a purchase it's like a credit card. If you made a purchase before the transaction comes due, there's usually a grace period. So like September 30th, or you made a purchase on September 30th, having to pay for that also on September 30th seems a little bit ridiculous, okay? So you could say that transaction that occurred in September has no cash receipt in September just because it occurred late in the period. That would be my only caveat, but again, 1 to 1 would be a reasonable interpretation given the information of the problem. If I ask this specific question on the exam, which I won't, but if I ask this specific question, I would take either one of those as a correct answer because both of those can be interpreted that way. All right, question number 26. Same question, or same association, but now we're going to be looking at this one up here, okay? So what is it going to be saying? Say customers could be involved in many sales during the month and pay with those sales at the end of the month, okay? So which of these multiplicities can be found next to the sales class? Okay, so cash receipts are involved with how many sales? So let's see, what would be the best interpretation of this? Okay, cash receipts are involved with a minimum of 0 or 1 sales. What do you think? 1. It seems kind of silly to get cash receipts for no sales. Customers say, we didn't buy anything, but we really like you, so here's some money. Yeah, that would probably not work. Okay, so cash receipts are involved with a minimum of 1 sales, but can cash receipts have multiple transactions in them? According to the rules here, it says yes, they can actually pay for multiple items at once. So 1 to many. So 1 to many, which would give us E as our answer. All right, question 27. We're still at number 7. Assume customers can be involved in many sales to the period and pay in full at the end of the month. Which of the following is the best example of a business rule that constrains the association? All right. So what does that imply? It implies that we're granting credit to a customer because it says they can buy many transactions during the month and they do not have to pay for that until the end of the month. There's a separation in timing between when the sales transaction occurs and when payment occurs. That's our definition of credit, right? So can we say that a business rule that says that customers are allowed to buy on credit probably is most consistent with that assumption? Yeah, and A says customers are allowed to pay for sales on credit. A is our answer. All right, moving on. Question number 3. Basic sales activity model for BPM using a fast food restaurant. Okay, then a second basic sales activity model using for a traditional restaurant. So let's think about this. This is not meant to be challenging or difficult, but I do want you to think a little bit about the differences. So can we say that we understand the processes that go to a fast food restaurant? I mean, we're going to go to Taco Bell because that's my favorite one to talk about. You walk into Taco Bell, what happens? You arrive. Okay, that's the event. The customer gets to the store. So that's our triggering event. All right. Then you walk over to the register and they take your order. All right. They take your order. What happens immediately after they take your order? You go and sit down in the booth and think about life? No, they say, all right, that'll be $5.55, which is probably too much for a Taco Bell order because they're supposed to be really cheap. I don't know. I haven't been to Taco Bell. What do you guys probably spend at Taco Bell? Between $5 and $10 on average? Yeah. Inflation is a problem for sure, for sure. So we'll say $7 to $10. Okay, so $7.08. That'll be our number for today. So they take your cash, and then they are in the back, kind of simultaneously, but a little bit after will take place. Is they're putting together your order. They're trying to make sure that they put together your food so they can do it. And then once it's all assembled, they deliver it to you. So we've got the transaction taking place, the payment for the transaction, the assembly of the transaction, and the delivery of the transaction. Can everybody say that's probably a pretty consistent fast food model? And I hope so, because that's the model that I put together. Now, before I show you how I put the BPMN diagram together, and I say the one that I copied from the book Solution Key. Let's talk about the traditional restaurant. Do traditional restaurants have that same process? Kind of, okay? They do have the same process, but it's not the same sequence, okay? What happens to traditional restaurants? So you go to Maxwell's. Anybody ever been to Maxwell's before? Yeah, go to Maxwell's. You arrive at the restaurant, all right? You sit down at the table. There's some small chatter, and then they say, "Can I take your order?" All right. Do they immediately charge you once you've actually taken the order? So we know there's a differentiation right there, okay? Your order's taken, they assemble your order, then they deliver it, and then at the end of the meal, you pay for the transaction. So that event that occurs where you make payments, that's not till the end of the activity model. So we can actually use the same activity model. We just need to change the order of events. All right. So we can actually break this down pretty easily. Fast food restaurant, arrival, take customer order, take customer payment, assemble, give the customer order, end when you leave the restaurant. Okay. I guess technically speaking, it's end when you pay for it, because they're not going. If you pay for a meal, your server's probably going to be saying, "Well, I don't have anything to do with that customer." So if you still sit around for an hour drinking water that's like emptying the glass and they won't refill it, I mean, technically that's still an end event. I don't know. Does that get to anybody sometimes when you pay for your meal and then the server kind of pretends you don't exist? Yeah, that's happened to me once or twice. Okay. Not at Maxwell's. I'm not saying Maxwell's does that. I'm just saying that it's happened. All right. I guess I'm doing fast food restaurant, but that's traditional restaurant. All right. The caveat to here, though, is that how would you add taking reservations in the second model? All right. So what happens in that situation? So the customer arrives, and what's the first thing that happens when you take reservations? So you go to a fancy place. My favorite one is Seabreeze. I've talked about Seabreeze here right before, like the restaurant, farm to market restaurant, north side of town, about 10 minutes. They're only open on Thursdays through Fridays. That's my cheeseburger place. You'll hear me talk about it a lot, especially those of you who are accounting majors. You're going to be like, "Okay, Dr. Barnes, we get it. You like cheeseburgers, Seabreeze." Yeah. So yeah, they require reservations, and you show up and say, "Oh, do you have a reservation?" They don't actually ask me that. They know my name now. But do you have a reservation? They check your reservation and see what your time is, and if that's a time, then they're going to seat you. So we're going to add an event right here at the traditional restaurant. Say check the reservation, and if they check the reservation, it's your time. They'll seat you. If they check the reservation, it's not your time. Well, Seabreeze generally they'll say, "Oh, we can probably fit you in," but maybe another restaurant says, "Oh, you're right. You're 15 minutes early. Just take a seat. We'll seat you here shortly." Or if you don't have the reservation, what might they say to you? "I'm sorry, but we're all full today. We can't fit you in." Has that ever happened to anybody? You've gone to a really busy restaurant that requires reservations and you try to sneak in and you can't. That's the worst thing in the world, because you're hungry and you're like, "Oh, now I got to find a new place to eat." I'm doing this right before lunch too. Isn't that triggering? Is this really triggering, guys? Yeah. You still have to work on NetSuite after this. Yeah. All right. So basically, we've got an event here, an additional event. We actually check the timer reservation, and then we see the customer, and everything else stays exactly the same. All right. But we're not done, because then we have UML diagrams. What is the first key to creating a UML diagram in any situation? What are we going to be talking about? Resources, events, and our agents, okay? So let's talk about our agent, or sorry, let's talk about our events first, because our events are going to be triggering everything else. So event number one is going to be what in a restaurant environment? The sales transaction where you basically say, I want food, and say, we have food here, we'll give you food, okay? They're going to sell you something, all right? Then is there going to be a subsequent event to that? Depends on the situation. Usually there will be a subsequent event. There'll be a cash receipt. Do we need to differentiate? Maybe, maybe not, but we will for purposes of this clarity, okay? We'll say a sales event and a cash receipt event, okay? Who are the agents involved here? There's going to be you because you're going to be going to the restaurant. Who else is involved? Nobody else, because it's a automated restaurant where no employees work whatsoever. That's the future that we're looking for. AI is taking over, but we're not there yet. Who else is involved? Employees. Yeah, employees. Okay, our agents. Okay. So what are going to be the resources? Can we say food is one of the resources at a restaurant? Hopefully so. That kind of defeats the purpose. What are you trading food for? Cash. Right. You're going to make a payment. So your UML diagram looks like this. Now you will notice it says fast food traditional restaurant model. Do any of our classes or do any of our entities change between fast food and a traditional restaurant model? No, because we can use the same one. This is working smarter, not harder. You only have to create one UML diagram and said, I use the same UML diagram, Dr. Barnes, and I'm saying kudos to you, okay? Don't get in the habit of it. All right. So yeah, use the same UML diagram because the classes stay exactly the same. But then we have the traditional restaurant with reservations model. All right. So can we say that reservations are a class that should be included in this diagram? Yes. Are they resources, events, or agents? Or are they none of the above? None of the above. What do we call those? Those are conceptual structures, okay? So keep in mind that we can include information in the UML diagram that doesn't fit any of our entities, but we can include that there. So that's basically what we would do here. So we'd include reservations. What are reservations going to affect? Well, they're going to affect the employees because we have to have employees take the reservation. We're going to affect customers because customers are the ones booking the reservation. And then they're going to affect sales because you have to have a reservation for a sales transaction to take place. Does anybody not like that conceptual structure? We added 3 new associations. It makes the diagram look infinitely more complex. Also, interesting point here. If you look this model up in the book, the argument, this is my solution for this, by the way, okay? Could we make an argument that there's an association between employees and customers here? The book actually tries to actually say there's association here. They don't provide any multiplicities for it, but they say there's association there. Can we say employees and customers interact in a service environment? Yeah. So even though they're agents and they're independent agents, we could say that there's an association because they do have to interact necessarily in this kind of environment. Now, I think that's a little bit of a stretch because I think that's true for other models as well. So you don't have to include that, but that's an interesting point to make. All right. And that's it. That was all for the homework. Are there any questions? Is anybody really, really hungry now and want to go get lunch? All right. Well, stick with me for another 25 minutes and then I promise that you can do your own thing. All right. Actually, it may not even take that long. Let's talk about what we're going to be doing today. So far to NetSuite, we've set up our company and we've done some preliminary transactions. Part of what we did last Wednesday is we learned how to create new accounts in the chart of accounts, and we learned how to use that to create transactions. And then we use those transactions in a custom transaction detail report to show that we created those. So hopefully you took notes on that and remember that from last week, because that's what you're going to be doing. You're going to be replicating that. This is a very simple activity, but it does require that you remember how we did everything from last week. One of the reasons that I'm doing this during class is I do expect people to say, Dr. Barnes, where do we go for this? And I'm going to say, all right, where do we go? And then I'm going to kind of direct you there. And then you're going to remember, it's like, oh, that's right. All right. So hopefully that won't occur too much, but you'll remember it. But you're going to be doing those 3 things. You're going to be creating a new account. You're going to be booking 3 journal entries. And then you're going to show me a custom transaction detail report for those 3 journal entries. Now, keep in mind your deliverable includes all 3 journal entries. Also, read the instructions very carefully. For one of the journal entries, you are specifically required to create a memo to show what the purpose of that journal entry is. If you fail to create the memo, you will not get credit for the assignment because that's part of the instructions. There's little notes and details, so you need to read every single little line that's included in the instructions because those are all critical to the analysis. So I'm going to let you work on that for the rest of class. If you finish, submit it to Brightspace, and then you're done for the day. If you need to extra time, it's not due till Friday. So this is basically our activity for the rest of the day. I'll let you get at it.